Hey, everybody, and welcome to another episode of the ReLaunch Real Estate Podcast. I'm very excited for our guest today, but before we dive in, I want to remind you to, if you have not subscribed to our show, we would love to have subscriber bases. You can absolutely get on our website at relaunchpodcast.com, and there are several links there to easily subscribe to our show so that you can get more valuable content and you can grow your business with our show. So today, I want to introduce our awesome guest. He's a friend of mine. We've been doing business together for a very long time. Very smart financing guy. His name is Chris Kerr at Elements Financial. Chris, thanks so much for coming on the show today.
Patrick, thanks for the opportunity to chat with you over this new way to have meetings in 2020, now 2021, but
are you getting
appreciate
Zoom?
the opportunity.
Do you have like the Zoom fatigue? Because I do.
Periodically, I'm like, another Zoom meeting. I look forward to the day where I can actually be in front of people and more often and not have to rely on Zoom.
But yeah, I'm over it. And it seems like it's totally, it's getting bogged down. You know, more and more people are doing it. And so we've had some bad Zoom experiences, but, you know, hopefully we get to do that in-person stuff here really soon. Tell everybody, you know, who you are, what you do, who you work for. If you want to share about your family, where you're located and all that stuff, that's awesome.
Yeah. So my name's Chris Kerr. I live in Brownsburg, Indiana, which is on the west side here in Hendricks County. Working on, I think, my 17th year out here in Brownsburg. My wife and married and have a wife and two kids, 14 and 10. My wife's a teacher here in Brownsburg, and I basically work at home a majority of the time, but I work for Elements Financial, which is formerly known as Eli Lilly Federal Credit Union. So we're a locally based credit union with processing and underwriting downtown, and have a lot of those roots from Eli Lilly. That's where a majority of our branches are at, and that medical field seems to be a lot of what we affiliate with as far as a credit union and some of those employers. So that's that part of it. I also, in my spare time that I don't seem to have very much of anymore, I coach baseball for a 14-year-old baseball team down out of Mooresville / Martinsville area called the Indiana Twins. So that occupies my summer. I'm either working on loans or at the baseball diamonds on the weekends. So I enjoy that part of it.
Yeah, man. And Elements is they do they're national, right? So you guys can do loans all over the country.
Yeah.
Okay.
Yeah.
And what was this year like last year for you? Like, what was 2020 like in regards to just how many loans did you chunk through? Because I know that you guys were crazy busy in this refi boom, plus a lot of purchases. Like, how was 2020?
I can tell you that the amount of business that I did in 2020 doubled from what I did in 2019. 2019 was a good year, but the number of loans that I closed doubled. So it was extremely busy. More of those being refinances than purchases in 2020, just because of where rates were at. That was the biggest thing. So it was a lot of work. When quarantine hit and people stayed home, I went to my office and just worked, and the phones didn't really stop ringing for months. And the question was always, what's going to happen? When that shutdown came, I was like, I don't even know how we're going to close loans. Like, are people going to meet face to face and sign paperwork? And luckily it all worked out. And, it was, title companies were given that, hey, you're essential business and keep on working. And thank goodness for it. And I'm sure, how did you react in March of last year?
Oh, yeah.
We're about to hit that spring market and you're like, what's going to happen? Like, are people going to buy houses? And then all of a sudden you're like, yep, I'm showing them on my phone, or we're going in person. Everybody's wearing masks, and it just went. And I was like, this is crazy, but we're persevering. And I think the more people sat at home, during quarantine and they weren't happy with where they lived, what do they start doing?
Oh yeah.
Shopping for something else, man. And people now probably want yards for their dogs and just different stuff that, you know.
They weren't thinking about before. Yeah.
Yeah. It's
Yep.
changed the people's mindsets for sure.
You killed it. Yeah. We were worried. We were worried the same. You know, there's like 2 or 3 weeks where we thought, oh man, we don't have any business. There's no way that we're going to be able to, you know, pay the bills. And literally we had, you know, the best year yet. And it sounds like
Yeah.
2020 was your best year ever.
Oh, absolutely.
How many
Yeah.
years have you been doing loans?
15 years.
Yeah.
So.
Man. How many, do you remember how many units you did or loans closed in 2020?
In 2020?
Yeah.
I actually 205.
205 loans closed. Holy smokes.
205.
I mean, you were probably burning the candle at both ends every day.
I woke up and I didn't stop until the day was done.
So. Man, a lot of great experience. Obviously, a lot of great clients. For sure. And if anything, you know, your repeat and referral business should be just skyrocketing over the next few years.
That's the hope.
Being able to help that many people. That's fantastic.
That's the question. One of the things that I kind of have in my mind are people going to sell their house 5 years from now if they're at 3%?
Yeah.
I don't know.
Yeah. I think it creates this awesome I read some article from an economy guy at realtor.com, and he projects that our real estate market will be strong for at least 10 more years because of that. Because the reason the prices are so high, as we all know, is inventory is so low. And now everybody's refining into these low rates.
Right.
And they're not going to want to sell. And so inventory will be low for a very long time.
Yeah.
And it's going to keep prices, you know, elevated for a long time, which is great. So it creates a nice balanced, not really balanced. I mean, it's a seller's market, but it keeps it strong. I think it's.
So 10 years. All right.
That's what he says. So maybe you can retire after that. You can retire early.
I keep telling my boss that I've got 1,000 loans left in me.
That's only 4 years if you repeat.
I'll be in underground if I have another year like 2020. It'll be you guys will come to visit me at the cemetery.
Well, we don't want that for sure.
No, we don't. We don't. So
that's awesome. So killer year, amazing year, guys. I'm going to tell you that Chris is one of those lenders. You know, y'all are agents that are listening to this most likely. Chris is one of those lenders that he is not just asking for your business as a real estate broker. He's, giving him business. He's really great at educating us and educating me on all the options that are available to me. And I will tell you without a doubt, you guys as real estate agents need to partner with a lender who educates you on all the programs and options available, because there have been many times, I'm going to say probably more than 15, 20 times in my existence as a realtor, where the only reason that I got the client is because I was able to educate them on financing or financing options that another realtor didn't. You know, a lot of real estate agents are quickly going to, hey, you got a pre-approval or not? Oh, okay, you don't. All right, you need to go get that. And when you have it, give me a call back and then we'll go help you. Or if they're working with sellers and sellers don't know how to finance something without selling their home, but they're scared to sell their home, realtors like, well, you know, maybe we'll wait till the market changes and we'll talk again. Well, Chris was able to educate me on all the questions I need to ask prospective buyers, and also all the things that I need to educate sellers on in regards to future financing and things that they can do with their equity, that I was able to land clients and plant seeds in their mind to put them in a better position instead of just going the conventional routes. So this is what we want to dive into today with Chris, is, you know, educating you guys on the things you need to be thinking about so that you can get more deals. So Chris, if you're cool with it, let's just dive right into the meat.
Yeah, throw it at me.
Okay, so obviously real estate agents get leads, whether they're Sphere or referral base or online leads or anything. And we get them, and we all are trained like LP Mama, location, price, motivation, approval, money, and then appointment. So these are the questions that we usually go down as agents.
What's that acronym?
It's called LP Mama. Location, price. Some people put motivation there or money in the M. A is for agent. So like, or some people use it as approval. So like, do they have an agent or are they approved? And then the last M sometimes is going back to money or motivation again. And then the A of mama is going for an appointment. So that's the acronym that a lot of agents get teach. We don't teach that at Crestpoint. We teach motivation, ability, and willingness to talk to us. That's what we want to know.
Yeah.
Those three things. And the ability obviously is generally financing. Well, a lot of agents go and say, are you pre-approved? Did you get a pre-approval? And people will say, no, I don't. And they'll say, okay, well, I want you to talk to this lender and just call me back when you're done. I think that's a huge fail.
Totally agree.
Not that agents should be playing mortgage lender, but I think that we should be able to have real basic conversations to kind of dig down. So
it's a time where they can gain trust, in my opinion, in that person by adding some useful knowledge.
Yeah. And everybody's teaching value, like provide value. Well, that's valuable, especially to a first-time home buyer that's never done this. If agents are able to have them on the phone and walk them through it. So my question to you would be, you get these leads and you start talking about the financing piece, the money piece. What questions do you think agents can ask just on a real basic level to figure out if this person has the ability to purchase, if they're a viable option?
I love that question. And I would pride myself on, I can probably figure out within 30 to 45 seconds in a conversation whether or not this person could buy or not. And it blows my mind. Now, generally, the first few minutes I'm just talking, getting to know them a little bit. But the two questions that I think open up the most knowledge right away is down payment. What kind of down payment are you looking at putting on a house? And maybe it's not directly asking that question, but something along the lines of, what kind of payment do you feel comfortable with on a house? What are you expecting? Okay. You might need this type of down payment to get to that type of payment on this particular type of house or things like that. So just finding out whether or not they have a down payment saved up or not is a huge green light, red light, in my opinion. You can find out real quick, oh, I got 25,000 saved up. Guess what? Green light right there. Move on. Don't think anything more of it. That's a solid lead. You get those people into, no, I've got 1,500 saved up or things like that. And I go, all right, now let's take it down this road. Where are you wanting to buy? Is it rural? Can we go USDA? Can we go, do you have any military background? Are you VA eligible? And you can quickly figure that out just based on, what they tell you as far as what they've got saved up for a down payment. And maybe you don't want to dive too deep with them, but at least knowing whether or not you have a viable candidate in some way, shape, or form is going to make you feel better at the end of the day and not waste your time showing them 40 houses.
Sure.
They aren't able to do it. So that's the first one. The second one, I think, that kind of opens up my eyes is, where do you work? What do you do? How long you been there? That kind of thing. Is it just going to be you on there that's buying the house? Married, single, both going to be on there? Just find out a little bit about what they do for a living and how long they've been at their job. If they list off 3 jobs that they've had in the last 6 months, probably going to have to ask some more questions as far as what's going on with that. I've been in my job for 10 years, 7 years. Here's what I do. That shows stability to me right off the bat. Things like that. That generally means if they've been somewhere for a long time, they probably got a 401k. Guess what? Maybe they can pull money out of their down payment maybe they don't realize that they have down payment money because they have a 401k and they didn't know that they could make a withdrawal for purchasing a home for a down payment on a house, things like that, that can open up some of those windows or doors in the conversation.
Do you ever ask them? So I do this, and I don't know how, our listener base is going to feel about this, but I ask them kind of the same questions, like, hey, where do you work? What do you do for a living? It's just great because you get to know who they are. And then you also can figure out if this is viable. I do ask them about down payment. Like, have you saved for this? That's how I'll ask. Like, have you saved for
Okay.
it? And then my next question is, do you know what your credit score is?
Oh yeah. Yeah. I generally don't dive into that until the conversation's gone a little, gone somewhere for a little bit,
Yeah.
just to see where they're at and to see if they monitor it. And that unfortunately leads into the conversation. Credit Karma drives me insane.
Yeah.
And I don't know what you know about it. And I love that it's a tool that people pay attention to, because it is a good tool. But I can't tell you how many times a week I have to have the conversation with, hey, my Credit Karma tells me my credit score is 708, and we pull it and it's 653. And they're going, what's going on? And the story I have to explain to them is to say, and this is what makes sense to me, is to say, if you walk into an office and 3 people pull your credit at the exact same time, one for a car loan, one for a mortgage, and one for a credit card, all 3 of us are going to pull different credit scores, because the type of credit that you're applying for dictates the equation that's used to calculate the credit score. So the most conservative of those being the mortgage. So generally, Credit Karma is giving you, hey, if you apply for a credit card, that's the most generous score module out there, in my opinion. And so I have to explain to them all the time of, what to do with that score and monitoring it. And what I tell them is you want to monitor that from month to month to make sure it's staying the same or increasing. If you see a drop from where you're at, I wouldn't necessarily say, hey, it's not like taking your temperature, that, if your score on Credit Karma says 708, it doesn't mean that it's 708 across the board, but you need to monitor it as a baseline to see if it goes up or down month to month based on that particular thing. That's where I think it becomes useful.
So let's dive into the credit question a little bit further. Say
Yeah.
an agent says, hey, what's your credit score? What kind of credit scores are you guys looking for to be a viable option?
So that's a good question. So prior to COVID-19, FHA for us was 600 and above, was viable. In between 600 and 620 was difficult, but it could be done. And once COVID hit, it's moved up to 640 across the board. So in my mind, that 640 to 680 number is your FHA customers. And then 680 and above is going to be conventional across the board. And that's where I'm trying to get people out of mortgage insurance, for example.
Yeah. So I'll tell you guys that there have been times where I'm talking to a lead, and I'll ask them these 3 questions that Chris uses that kind of determines if this is a viable option. Do you have any money saved? What do you do for a living? And then, do you know what your credit score is? And I've had leads say, well, I think my score is around 580, or I think my score is around 620. And I know we're trying to get them 620 or above, like with a nice buffer on that. And most all FHA for the most part is like 640. There's occasionally a few people that'll do it for less. But now, if you have the person, I don't know if we as agents should be playing this role, but let's say an agent gets a lead and they say, yeah, my score, I just looked it up. I just got a car and they sent me the thing in the mail and they said my credit score was 610. What do you think agents should say there? Like, in regards to, okay, well, it might take X amount of days to get that up. Here are some things that I'd be thinking about doing, or here's people that I'd be talking to work that up. What do you think that they should say?
In my opinion, I think of that situation as you are turning that into more of a long-term person for your pipeline.
Yep.
And building that relationship by turning them over to a trusted loan officer that can give them advice, is knowledgeable, and can coach them on what to do in order to be able to finance a house. It may not be your 3 months from now paycheck, but it might be your 15-month from now paycheck, and taking care of them and filling that pipeline up of those things that come along and you go, oh yeah, we've been working together for a year. I've had some customers that 3 years I've worked with them, and I've had to have the conversation before of, you need to file bankruptcy to get started over. Oh, what, and that scares the crap out of them. And then I explain it to them and go, hey, you're going to be better off 2 years from now if you've done this, opposed to waiting 2 years from now, hoping that you get this thing cleared up, knowing you never will. You're going to be better off to get it started. So to answer your question, try and get a connection, have a lender of some sort that you trust, that's going to build a relationship, and coach them and build that relationship and send them back to you once they are ready.
Yeah.
As far as, you don't, I think as a real estate agent, you don't necessarily want to become the lender.
Right.
So I would say keep it high level. The more the digger you dig, the more walls they may throw up. It would be my thought there. But.
Sure. Yeah, I think people are much more open to having these harder conversations regarding their financings with, a loan officer than us. Mm-hmm. And I can usually get a pretty accurate credit score from somebody just verbally, what they do for a living.
Yep.
And if they have savings. Once I get past that, I'm, if they're viable in these 3 realms, it's time to maybe educate them a little bit with what they can do with that down payment. Like, hey, these kind of loan types would maybe fit what you're looking for, but you're going to want to talk to a lender to make sure that that's a great fit and verify all these things. And then that's when I'm passing them, along to the lender. And, we've seen that too, right? Where you're working on somebody who's got a credit score like 610 or 580, and then it does take a year. And you're right,
and sometimes it can be 2 months. It just depends on what that situation is, and getting them in contact with somebody that can evaluate their credit and coach them to make it better. I mean, I've seen situations where I had one person that we needed their score to go up 10 points, and they had a Sears card. I remember this, and they had a Sears card and they had a balance of $79. I told them to pay the balance down to $29. I run a report that says, hey, if their balance goes down to $29, their score is going to go up 12 points. I tell them to do it. They, instead of paying it down to 29, they paid it to 0. I did a rescore. Score went down. I told them to go buy a bag of wrenches at Sears for $29. I did another rescore. Score went up to where we needed to go. Yeah, it was a matter of $50. So there can be quick fixes. I love it when I see those, because those are the sweet spot. But sometimes it's more about building and getting things on track and correcting those things. Yeah.
So guys, get with somebody that you can, trust, and pass them along for the pros to do their thing, and make sure that you're also, working with somebody that's just not interested in the cream of the crop, like the 780 credit scores. You want to make sure that it's a two-way street. The lending and real estate relationship is a two-way street. Don't hand all the junk, to them just to fix it. Like, do your due diligence. Like, I know of real estate agents that literally call leads, and they're like, are you pre-approved? And they'll say no. And they'll be like, okay, this is who I want you to talk to in regards to financing. And there's people with like 400 credit scores that are applying, or don't have jobs, or that wanted to rent, but the agents weren't asking the right questions, and they're applying, and they're running the loan officer ragged. And then the loan officer isn't going to work your leads like they should over time, because you've burnt that bridge. So the key is, as an agent, is to try and ask enough questions to get a viable lead, and then you hand it to
That is great advice.
the mortgage officer. You don't want to burn the bridge with the officer. So in recap, you'd think that agents should have a savings conversation. Hey, do you have any savings for this?
Yep.
Do you know how much savings it takes to buy a house? Do you know about
Yep.
down payments? Work employment. What do you do for a living? You know, if you hear I'm a teacher, nurse, dental hygienist, dentist, physician, you know, pharmacist. I've worked in a warehouse for 5 years. I'm an engineer. I am an IT
Those
guy.
are all good ones, but I like where you're going with that. But there's also some red herrings out there that you've got to figure out whether or not they're self-employed.
Yeah.
Because I can't tell you how many people think they make money, but they're self-employed and they don't claim that they make money, that I have to have that conversation with them to go, unfortunately, you told Mr. Uncle Sam that you made minus $3,000 in 2019. That's what I have to use to qualify you.
Yep.
So, you know, things like that. Oh, you're self-employed. Not that, you know, there can be good self-employed and there can be bad self-employed, for sure. So just keep that in your mind as well, in the back of your head.
Yeah. So maybe a great question for an agent is somebody says, oh, I own my own business. How long have you been doing that?
Yeah.
You know, was your company profitable in the last 2 years? You know, those kind of
Right.
things. Okay. And then credit score.
Yep.
You know, if they're saying something to you that's, you know, around 640 or more, I think as an agent, I would start showing them houses because I wouldn't want to lose that relationship.
Yep.
Like if it was yes on question 1, yes on question 2, and yes on question 3, I would say, you know what, let's go ahead and look at that house. But in the meantime, I would love for you to start a conversation with Chris.
Yeah, get serious, get this part figured out. Because what happens I can't tell you how many times I'll get a phone call at 7:00 at night on a Tuesday from somebody that wants to get pre-approved, and they're going to look at a house. And what happens? By 8:00, they're calling me back going, oh, well, never mind. That house got sold to somebody else. And I'm like, well, now's the time to get ready, because there's going to be another house that's going to come along that you're going to want to get pre-approved for. Let's get that foundation built to make sure that you can do what you want to do. So when you want to do it, you can put that offer in. So
I love that. And I have a question. This is random.
Yeah.
And I'm going to set it up a little bit for the equivalent. So for us in real estate, we find that when you're working with buyers, for us as agents, I mean, when you're working with buyers, when you set an appointment and you physically go to that appointment with the buyer, you show them one house.
Yep.
Your loyalty there, I don't have the numbers, but I'm saying 7 to 8 out of 10 people that we show one house to, they stick with us.
Yep.
What's the equivalent on the lending side? I'm just curious, like if they get a pre-approval with you, what's the equivalent? Because that's kind of like you guys going on your first date, right? And like you show them the first house.
Yeah. I would answer the question to say my number is probably pretty high.
Yeah.
From the number that I keep once I get them a pre-approval. But in my mind, the answer is probably more geared towards, it depends on where that lead came from. You know, was that sphere? Was that, you know, work related, just different things in where that came from? You know, I pride myself on that first connection that I make with somebody to dig, you know, to build a connection. And I'm not, and I'll give a little bit of I'm not necessarily trying to be the 100% professional all of the time and very straight laced. You know, I'm trying to show them I'm a real person, make a connection. It's real life. You know, if I'm at baseball practice, I'm going to let them know, hey, I'm at baseball practice. I'd love to help. Can I call you back in 15 minutes? I'll step out. just different things to build that connection. They go, oh, this guy's a real person, but he obviously takes his phone calls, which I think is probably one of the best things that you can do in this industry is answer your phone.
Answer your phone. I'm gonna do something really awkward. I'm gonna unbutton my shirt right now for the podcast listeners. Check this out. Can you read this?
Oh my gosh. I wish if we would have set that up, we could have done that better. It's the truth, man.
Yeah.
And underneath it should also say, and call me back.
Yeah. Yeah.
Because I couldn't tell you how many, and sometimes I'll get people that, you probably do this too. I'll get a phone call and I don't answer it and they don't leave a voicemail, but I don't know what the number is.
Right.
I'll call them back.
Yeah.
I'll call them back or I'll shoot them a text. Hey, just
Mr. Call, how can I help?
Yeah.
You sell houses, guys, when you answer your damn phone. Like, just answer your phone.
That's exactly right.
There's so many agents that and loan officers that I know that their voicemail, when somebody answers, it says the classic like so-and-so number, this person's not available or whatever. Yeah. Please leave a message.
They don't have a voicemail set up. I'm like, all right.
What the heck? Like, how do you expect to sell houses?
Well, that's where in days of old, I wouldn't know what to do, but I'll just text them now. So
right. Yeah.
And at least they have my information. If they want to call me back, they can, but.
Sweet. Okay. So this was great stuff. Super valuable. Down payment, where are they working, credit score. So these are questions that you can ask as a real estate broker to figure out how viable somebody is. You're looking for probably like a 620 or better, 600, probably to set a showing.
Yeah.
And if you don't get that, it's probably like, hey, let's talk to the loan officer. Let's see how quickly you can get that credit score around before we go show. Now let's talk about products. So what products, loan products, programs should agents be very knowledgeable about so that they don't miss an opportunity on a sale and so that they can educate their clients? Like, maybe give us a quick rundown of like what an FHA needs, what a VA needs, what a conventional is looking for, and then your guys' products too of, what would be really good to think about.
So the biggest thing, ask that question again. I want to hear it from the.
Yeah. So like what do we need to know about the popular loan products so that we can tell our clients all about it? And then what other special things should we be thinking about or products should we be thinking about?
So the biggest thing that I think that jumps to my mind off the bat, and I'll hit on the other stuff, but the biggest thing that I think that hits me in the face when you ask that question is the current environment in real estate it's right now. If you're trying to buy that house right now, houses are selling 24, 48 hours. And if it's longer than that, then generally there's probably something wrong with it in some way, shape, or form. So, and why that hits me like that is to say, I can't imagine how many people out there aren't willing to sell their house right now because they aren't sure where they're going to go if they do sell their house, and when is that house going to come on the market? So how many people aren't putting their house on the market because of that? And that leads me to the tool of what we offer at Elements. Is called a bridge loan or a swing loan, which is an opportunity for you to pull equity out of your current property without selling it and buying a new house. So with a large down payment, if you got 50 grand, 60 grand in equity in your current house, you can take some of that out, put it as a down payment on that new house, buy that house. Once you're moved in, put that other house on the market and sell it, and take away that fear, at least give that potential customer a tool in their, a tool in the toolbox to use to be able to purchase a different house. Does that make sense?
Oh yeah, absolutely. Yeah. And I've got like real life stories here, podcast real life stories. Like we do a little shing. You get real life story of seriously where we get leads that come in or call me directly and they'll say things like, hey, I saw you sold our neighbors, saw that you sold our neighbor's house.
Yep.
And we really do want to sell, but here's the thing, we just don't know where we're going to go. Every single time we find a house that we get excited about, it's gone in 24 hours, like you said. And before I had met you, I wouldn't have known this. I say, hey, listen, you probably have a ton of equity in your property. And I understand that you're really concerned about putting your house on the market. You're going to be homeless. You don't know where you're going to go. And you're going to settle on a cruddy house that you don't want just because you sold your house really fast. I don't want that for you either. So here's what I would say. Why don't we meet, discuss how much equity that you have in your property and also your viability in financing. And then you actually might be able to just buy your dream property first. Don't be in a rush to sell your house. Go get your dream property first with this bridge loan of pulling your equity out, paying interest only payments while you're in that period.
Yep.
And then closing and getting a regular loan just like everybody. And that opens up two opportunities. One, they're interested in that. They're ready to have me over, and a realtor usually has never talked to them about that.
Yeah.
Or two, they're not interested in it because they feel like it may be risky, and I have to explain to them that, it's really not, but I understand where you're at. But now they're like, but I want to work with Patrick because he just taught me something that no one else has.
Yeah.
And he's clearly knowledgeable.
It's that talking point. It's having something to engage them, give them some knowledge, and teach them something that they didn't know before.
Yeah.
Gain that connection.
So basically, if you could give us like a 30-second how the bridge loan works, tell us.
Think of it as like a home equity line of credit on their current house. But if you already, once you've listed your house for sale or going to sell, you can't get one of those. So a bridge loan just takes that place. So let's say you have a house that's worth $300,000, you owe $200,000 on it. You can borrow up to 90% of that appraised value. So if it's appraised at $300,000, what is that?
90% of the equity of that, right?
Yeah. So if you said,
if it's appraised at 300K and they owe 200 on it, they have 100K in equity. They can borrow 90K.
They can borrow. So 300,000, if it's appraised at 300,000, 90% of that would be 270, and they owe 200 on it. So the difference between 270 and 200 is 70 grand.
Oh, okay.
So they could pull 70 grand out for a down payment. And then they still have that 10% leeway where they got 30 grand for real estate fees, selling the house or negotiations. I don't always encourage them going up to 90% unless they have to. And sometimes we're taking that money and paying off debt.
Yeah.
To help them qualify. Improving credit score, doing things along those lines is what that tool can be used for across the board. But
you and I probably did 12 to 15 of those this year.
Yeah.
Maybe. Maybe even more, but it put all of my people in a really great place because they were able to buy what they wanted with no contingencies.
Yeah.
Not having to sell. And then their house quickly sold. They probably, most cases, paid maybe one interest only payment.
Yeah. And never probably had to make the double payment.
Yeah. Yeah.
Because of the quick real estate market. And that's where I have to coach them through and explain it to them over and over. Just so that's the biggest thing for me is I never want somebody to get in over their heads and not understand what they're doing. And it's a little bit of a confusing product for people that they don't necessarily get it until I explain it to them over and over again on how it works. But it's a great tool in the toolbox for people to, give to somebody that I think is underutilized, and probably because not a lot of places offer it.
Yeah.
So it's one of those things that I'm aware of. I know how to use it.
It's so surprising how many agents that I talk to, and even ones that sell, maybe $3-4 million in real estate a year, which isn't, a ton, but that's way more than the average bear, and they don't know about these.
Yeah.
It's very surprising.
Yeah.
So give us a quick rundown then on the most common loan, programs, and most of these agents know them, but like what are you looking for, and what will we be looking for to see if they're viable really quickly?
So when I first start talking to a customer, I'm trying to gauge where they're at, what type of program they're going to be put into long term. And the quickest thing you can figure out is credit score, where they at. If they're below 680, they're going into FHA, maybe USDA, maybe VA, if they're VA eligible. So 640 and above used to be 620 or 600. Hopefully that loosens up sometime in 2021. And I don't know that that's just Elements, or if everybody's that way as far as where that score's at. I'm sure there's some places that are doing it below 640, but I don't know how many.
Yeah.
So I'm trying to figure out, all right, do you meet the bottom tier? And then if you do, all right, how do we move you up the food chain to get you into a better product? Because ideally you want to get into a conventional loan.
Yeah.
And what I pride myself on is getting people out of mortgage insurance. So Elements, that first time home buyer program, 5% down, no mortgage insurance. You can't beat that.
Nope.
It's a product because of our roots in Eli Lilly that we created for Eli Lilly a long time ago, and it's just stuck as something that we offer, that if you got a credit score above 680, got a few months worth of reserve saved up in addition to your down payment, that we'll do it 5%, no mortgage insurance, which can save you what, 80, 100.
I've seen like up to $150. Yeah.
Yeah, if not more. So, and there's other ways to get out of mortgage insurance monthly. And I love coaching people on how to do that conventionally without putting 20% down, especially right now. I couldn't tell you how many people that I know have more money to put down, but they're like, if I can borrow money at 2.75% or 3% on a purchase, why am I going to throw it into that when I could go and invest in something? And I'm like, so be it.
Sure.
I don't disagree.
Sure. So, yeah. I mean, I think that's, not to make you blush here, but I think that's probably why you've been so successful, is because you're thinking, you take another 2 minutes, that's really all it is. You take another 2 to 3 minutes to think about the longevity of this person, getting them out of PMI, what's going to be best for them, instead of just trying to squeeze them into a loan package, get it going. Because if you can save somebody $150 a month in PMI, and you're telling them that you want to try to accomplish this for them, here's all the things that you have to do, these people are going to be loyal, return customers for life, all because you've done that. Other than, they go to some big box bank and they walk in the door and they say, hey, I want to get pre-approved. And they say, okay, you got FHA. You're going to have to go FHA because you don't have 20%.
Oh.
And sorry, but you're going to have PMI forever. Yeah. Plus the upfront, mortgage insurance premium and stuff. So it's just like, just doing those extra things, guys, for your clients. Like, as realtors, if you have a loan officer that offers these kind of products, I believe it's okay to also advertise those products on the phone when you're talking to these leads. Yeah. Because I'm getting down payment, credit score, and what they do for a living when I'm asking them these questions. And if somebody's like telling me they're in the market for a $200,000 house and they have $25,000 saved up, I'm like, okay, well, that's over 10%. I know Chris does 5%. No PMI. Hey, buyer, I know this is your first time, but did you know that if most banks, they require 20% down, or you're going to have to pay $150 a month or so on average in mortgage insurance? You should be talking to Elements because they only require 5% down. And they're like, man, that's awesome. I didn't know this.
And then I get the call, how do you do that? And I have to explain it to them we don't sell necessarily all those loans to Fannie Mae or Freddie Mac. So we can kind of set some of our own guidelines and how we do things.
Yeah. So then now I'm valuable.
Yep.
Chris is valuable. And they're like, well, I got to stay with these guys. Even if they can't get me in the house in an hour and they can in 3 hours, I'm going to stay with them because they've got this, right?
Yeah.
So love it.
I wanted to hit on one other thing that we had talked about, and it can open up another can of worms as far as when you ask that question of what do you do for a living?
Yeah.
And I'll talk about our professional program, which is 100% financing for doctors, lawyers, nurse practitioners, veterinarians, nurse anesthetists, if I'm saying that right.
The nurses that put people to sleep.
There you go. Yeah. That's 100% financing for those folks on a 30-year fixed with no mortgage insurance. So you get a candidate like that and being able to say, hey, I know maybe you don't have a down payment, but did you know about this particular product that these folks offer 100% financing, 30-year fixed, no mortgage insurance? What? Oh, all right. Now I got a doctor out of Richmond, Indiana that has been in the business for 30 years, wanting to buy a house, but he's doing 100% financing. And I'm like,
because
wow.
he can.
He's like, I'll keep my money invested where I got it, and I'll just pay the interest on this and invest it in something else. And I was like, all right. Now, you might get a better rate putting 5% down in the professional program than not putting 5% down, but there's options there.
Yeah. That's all people, that's what this all boils down to is people just want options.
And you guys as agents need to know what those options are enough to be dangerous and point them in the right direction to gain a little bit of knowledge and give them something that they can walk away with and go, all right, that guy knows what the heck they're doing.
Yeah. That's all it comes down to. It's pretty basic.
Yeah.
So let's wrap it up with something fun.
Okay.
Weirdest or funniest story in financing, or the craziest thing you've ever seen someone do in financing?
So I periodically teach classes as with Elements Financial. We're the credit union for a lot of employers in the Indianapolis marketplace. So like IU Health, Butler, Roche, just a few places around town. So I'll go and I'll have to teach classes. And one of the things and it's just like first time home buyer class, things not to do. And the thing that pops in my mind, and I love this story, and it's a true story from one of my early years in the industry. And I just shook my head. So when you're meeting with a customer or they're buying a house, do you encourage them not to do stupid things in between, getting an accepted contract, getting pre-approved and closing on that house? And I'll give you, for instance, my wife and I bought a house 3 years ago, maybe 3.5 years ago at this time, but she was shopping for houses for 5 years prior to that I never would even entertain it. Any road trip we went on, I'm driving and she's on Zillow or realtor.com just looking at houses. What do you think about that? I'm like, we're not ready. And she didn't get it. But, and then we buy our house and she wants, we went from like 2,000 square feet to 4,000 square feet and had to fill it up. And I'm like, no, once we close on this loan, we can start going and getting furniture and putting things on, that kind of game. So to tell this story, had a customer, we'll do what's called a verification of employment, usually about 72 hours before closing, just to make sure that make sure people are still working. So this particular time, and we'll also have to pull a credit refresh.
Yeah.
Generally 10 days before closing to make sure you haven't opened up anything new I used to do a ton of FHA. It was prior to me working in Elements. And like I said, it was 2 or 3 years into me doing this job. And we pull the credit refresh and my processor calls me and says, hey, Mr. Smith opened up a credit card at Hillsburg Diamonds. And I was like, all right, how much is that payment? Well, it was like $450 a month. And I went, oh no. So I call Mr. Smith up and I said, Mr. Smith, I show that you opened up something at Hillsburg Diamonds. What's going on? And he said, Chris, I forgot to tell you, in a month or two that you talk to these people, you become best friends.
Oh yeah, totally.
Sometimes I never even meet them. They don't know what I look like. They don't know anything about me, but you become very entrenched in people's lives. And he says, Chris, I forgot to tell you, bought an engagement ring and we got engaged in the backyard of the house that we're buying. I proposed to her in the backyard of that house. And I said, Mr. Smith, I said, unfortunately, you no longer qualify to buy that house because of that $450 payment that you have on your credit now. You no longer qualify to buy that house. I said, now, here's what you can do. You can take that ring back to Hellsberg Diamonds, return it, and update your credit to where it shows that you have a zero payment on that particular property. And then you can go and get that ring back a week or two after closing. So literally had to delay closing.
Did he do it?
Oh, absolutely.
Okay, good.
Returned it. Probably delayed closing 2.5 weeks, something like that. But just one of those like, oh my gosh, I can't believe you did this. And he's telling me about how he proposed to her in the backyard. And that was just a nightmare. And then the other one, verification of employment. I had one guy, we do a verification of employment. He's closing on Friday. We call on Thursday. Oh, his name, I think it was Mr. Smith actually, but he retired the day before closing. So I call him up. I said, Mr. Smith, did you retire? Oh yeah. Once we decided we were buying this house, I decided I was going to retire. And I was like, oh no, you no longer qualify to buy that house until we figure out your income and where it's coming from and how much Social Security and how much from pension and when that pension hits and so on and so forth. So the biggest thing I can tell people is don't go and do stupid stuff in between getting pre-approved and buying your house and closing on it, because it can just lead to mistakes.
Yeah. And realtors, we all need to play a part in that too.
Oh yeah.
They need to hear it from everywhere. Yeah. I've had people quit jobs too. Like I've had a listing where the buyer quit their job because they wanted more time to move. Yeah. And they killed the whole thing.
And here I'll give you the other side of that. I had a customer, and I believe actually she's closing today when we're filming this, that she knew she was taking a different job, but she told me as soon as she got the accepted purchase agreement, and I said, here's what here's how you handle this. You're not doing anything until after closing.
Yeah.
You're staying where you're at. Now, would she have qualified at the new job? Yes. But then you got to have pay stubs and be there. And the timing just was not working. So we worked our way through it because she was honest and upfront with me about it.
Yeah. I mean, I think the thing that we need to tell people is, unless you're in the top 1% of the country in wealth, which most of us in this world are not.
No.
Don't do anything like changing a job, pulling out credit for anything. Really don't make any big purchases whatsoever.
Yep.
And just wait until closing.
Yeah.
I mean, super simple. Man, those are good stories. Well, hey man, let's put a bow on this. I want everyone to know how to get a hold of you.
Okay.
And I want everyone just to know that, guys, I'm telling you, I've been doing real estate now, like approaching 6 years. I remember when I first met Chris, I wasn't really interested in talking to him because I told you this story. I had like this preferred lender that I used to work with. Yeah. And one of my clients came to me and was like, I'm already approved with Elements Financial. And I was like, well, you might want to talk to my preferred, whatever. Chris talks to me, I think at that closing or as we're leading to the closing. And I'm like, you know what? This guy knows what he's doing. He's actually spending the time like telling me what to be thinking about. And it created a relationship that's lasted here for several years. So, and we do pretty much everything together. And so I want you guys to know that you won't get a better educator and somebody who's thinking outside of the box for their clients than Chris. So Chris, if you want to just tell them how to get a hold of you, we'll wrap this thing up.
Easiest way to get a hold of me is my phone. You can reach me at 317-201-7334. Also email would be the other which would be CKERR at elements.org. So you can also find us online at elements.org as well.
And your specific site is elements.org/C Kerr, Kerr.
Correct.
Right?
Yep.
Yeah.
/CKERR. And lots of good information on there about all those different types of programs. And
awesome.
Love to get to meet people and coach them on some different products that they may or may not be aware of.
Awesome, man. Well, thanks so much for joining. As always, guys, please subscribe at relaunchpodcast.com. We're going to bring you new and valuable episodes every single week, every single Wednesday. So if you ever have any comments or suggestions of what we should talk about, please leave those under our videos or in the review section of the podcast platform that you're listening to. Thanks a bunch, and you guys have a great day.